All right, welcome back. My next guest, he just got back from a trip to the Far East. So who better to pose this question than to him, right? Is China losing its place among the world's elite economies? Now, China's economy is experiencing a significant structural slowdown, driven mostly by a domestic real estate crisis, plunging consumer confidence, and deteriorating investment activity. Now, they've deployed at least 3 large stimulus packages that have really yet to make a significant dent in their fortunes. The consumer is really showing us some ominous signs. Retail sales growth hit a near historic low of just 0.2% in April, drastically missing the economic forecast of plus 2%, right? So minus 0.2 to plus 2. Right? Citizens are withholding spending and they're hoarding cash due to deep anxieties regarding future wage growth, a weakening social safety net, and long-term pension security. I would say that kind of sounds familiar, doesn't it? And finally, real estate investment, which is huge over there, that plunged 13.7% year on year as home prices continue their downward slide, eroding the primary store of household wealth for most ordinary citizens. Now, my next guest, he's an avid investor and will have something to say about this as a weak China affects our own economy here, too. Please welcome to the show, Mr. Keith Fitz-Gerald. Keith, thanks for being on, brother. Really appreciate it. Right now, he's in Seattle, so we can call him the Sultan of Seattle. I know you keep an eye on these type of things, but is the window for China's dominance starting to close a little bit? What do you think?
Well, you know what? I tell you, I know that's the Western image. I know that's what's promulgated in the Western media, but respectfully, I will disagree and vehemently. I've spent an awful lot of time, decades in the Far East, and China's economy operates very, very differently than the West does. So it's a mistake that Western economists make consistently to apply our metrics to their system. In fact, it's bifurcated. They are systematically deflating a consumer credit bubble. They are not looking for the massive bazooka-like spending stimulus that we have here, because what they want to do is continue to boost their high-tech manufacturing. They want to rejigger their economy. And in fact, I think it's going much stronger and more consistently than the West wants to acknowledge.
So, I mean, a healthy China is good for the world, and so we want to keep an eye on those types of things. But it does seem like, I mean, look, they're not growing like they used to. I know for a fact, like the first 10 years of this millennium, between say 2000 and 2010, they poured more concrete in the
Yep.
country of China than the U.S. has poured in its entire existence. I mean, that's hellacious growth. I mean, that's amazing, isn't it? But I mean, I guess you can't keep that up forever. We've all heard about the ghost towns, but it does seem to me that things have slowed down. Is that fair to assess?
Well, again, you are correct that they've slowed down, but when you're talking about an economy that is that size, it is natural that the economy begins to transition to slower growth. So I'm not defending this in any way, shape, or form. I don't agree with a lot of what China does. I don't particularly like what Beijing's policies are at the moment, but that doesn't change the reality that they've had the largest GDP in the world for 18 out of the last 20 centuries. It's a numbers game, pure and simple. And so when you talk about things like how their economy is moving, is it speeding up, slowing down, the West measures that in terms of consumer stimulus. Where's the spending coming from? China doesn't work that way. It's a unified financial system. So when you have things like the housing crisis or you have the slowdown in consumer spending, you got to remember that those things are being inflated with regard to high-tech manufacturing, global sales. China looked at the U.S. and went, okay, fine. They went to South America. They went to Africa. They went to the Middle East. So there are elements of the Chinese society that by design and central planning are in fact working the way they intended. So, capitalism and democracy, are only written in our book. Capitalism and communism is written in their book, and it's very different.
Yeah, it for sure is, and hopefully, I mean, I'd like to think that we're making some headway with artificial intelligence, and we're winning that AI war. I think I would like to the U.S. to be leading in that category, But we'll see, and it also starts to affect our investing because healthy China is good for the whole world, right? So we'll have to take a quick peek at that, or we'll keep it quick on it. But I do want to bring something else up here. I know that you've just come out with something, and I think it's pretty big news. Your own ETF, right? Why don't you? I've given you 120 seconds, you and I, to talk about it, but I wanted to give you a little bit of a platform to get that out there.
Well, you're very kind. Thank you very much. Most investors, and here's why this exists. The ticker is FITZ, F-I-T-Z, which somehow is appropriate given it's Fitz-Gerald. So you can say get FITZ or have you got FITZ yet? But here's the thing is most investors are using a roadmap that was designed 30 years ago, and the markets have changed. The world doesn't look anything like that. This ETF is going to be focused on a simple thematic approach that is at the core, not an overlay, and is going to give people the opportunity to earn and own must-have companies making products and services the world can't live without. It's a way to go forward into the world that we're going to live in, not the world that we're leaving behind. Slicing and dicing isn't our thing. Investing thematically is.
All right, so how do investors get involved? When does it kick off? I mean, and how long have you been working on this, by the way?
Well, we've been working on this for a couple years. Obviously, the metrics are kind of complicated to get it right because it's a high bar that we have to pass. But it's anticipated to start trading on the 28th of May. The ticker will be FITZ. And if we do this right and everything that goes according to plan, you'll be able to call your broker, say, I want FITZ, and buy it.
And then that's going to be something that you say is going to give investors a chance to what? Why don't you let them know exactly what if they're buying FITZ, what are they buying?
They're buying 20 to 30 of the world's best, most successful companies that you can count on, names you won't be embarrassed to own, things that will help you sleep at night. Now, obviously, there's no guarantees. Markets go up and down over time. But our research indicates, Scott, that less than 1,000 of all of the companies in the world contributed to 99% of all the wealth over the last 100 years. And that number is getting more and more concentrated. So what you want to focus on is that narrow list of truly great companies, a process we call buy the best, ignore the rest.
Buy the best, ignore the rest, from the Sultan of Seattle, Mr. Keith
I think I
Fitz-Gerald.
lost you,
There
Scott.
you go. You want to buy FITZ. I love it. I love it. Well, anyway, we're going to go. Thank you very much for being on. Appreciate you, Keith. Keith Fitz-Gerald coming to